Imagine paying more than $1 billion for 2 pizzas and doing it on purpose. Picture a late spring night in 2010, a small online forum buzzing with code, ideas, and a community of curious experimenters. A programmer named Laszlo Hanyecz, living in Jacksonville, Florida, tired and hungry, typed a simple offer. He would trade 10,000 bitcoins for 2 large pizzas. At that moment, Bitcoin was not an asset class. It was an experiment, lines of code, and a fledgling network dreamed up by someone known only as Satoshi Nakamoto. Most people saw it as a nerdy curiosity. A tiny group of enthusiasts tried to refine it, mine it, and prove it could work. Laszlo was one of those people, a coder who had mined coins on his home computer, fixed bugs, and helped the network grow. He did not see the future as a fast track to a hedge fund. He saw a tool, a protocol, and a puzzle to solve. So when hunger struck in May of 2010, he decided to use Bitcoin the way it had never been used before, to buy something real. He posted on the Bitcoin Talk forum, asking if anyone would order him 2 pizzas in exchange for 10,000 BTC. The message sounded absurd even to that community, because Bitcoin had no established market price, no exchanges of note, and very few people who trusted it enough to spend it. A teenager with the handle Jerkos, Jeremy Sturdivant, replied and agreed to help. He placed an order at a Papa John's in Jacksonville, paid in dollars, and Laszlo sent him 10,000 bitcoins in return. The pizzas arrived. The transaction was simple, physical, and mundane to steaming pies at a porch. But it was the first recorded purchase of a tangible item with Bitcoin, and its meaning would only grow with time. At the time, the coins Laszlo sent were worth roughly $40, enough to pay for lunch and not much else. Yet the symbolism was enormous. For the first time, code had been exchanged for a slice of the real world. The dame May 22nd, 2010 became Bitcoin Pizza Day, an annual celebration among crypto communities that honors the first time Bitcoin proved itself as a medium of exchange. It was also the moment when the world began to ask the question that would haunt investors and meme lords for the next decade. What if that pizza had been held instead of spent? Over the following years, Bitcoin's price would climb in fits and starts, surging from pennies to dollars and then to astronomical values that early adopters could hardly have imagined. By 2011, those 10,000 bitcoins were worth several $100s. By 2013, the sum reached into the hundreds of thousands. By the end of the 2017 rally, that single purchase was worth tens of millions. And after Bitcoin's later all-time highs, the notional value of those 2 pizzas ballooned into the hundreds of millions and, at one point, crossed the billion-dollar mark. Memes were born. The most expensive pizza in history, the cautionary jokes about pizza slices that could buy mansions, and the baffled wonder at how a simple, hungry act could echo through markets. But if you talk to Laszlo himself, the emotion isn't regret. He's famously said he has no regrets, that he was proud to help boot Bitcoin into the real world, and that the pizza purchase was about proving utility, not scoring a future windfall. To him, the pizza was the cost of turning a laboratory experiment into something people could trust and use. That perspective reframes the narrative. This isn't merely a story about missed riches. It's a story about how ideas cross from theory into practice. A currency is not real until someone uses it to buy something you can taste, touch, or eat. That single act of trading code for food gave Bitcoin an important data point, an exchange rate, and a story to tell. It forced people to think about price discovery in a new way and gave the nascent community a practical example to point at when arguing that Bitcoin could be used for commerce. The story also exposes how fragile and contingent value can be. Value isn't inherent in lines on a ledger. It is born from belief, utility, and network effects. 10,000 tiny bits of code were suddenly worth whatever someone else believed they would be worth tomorrow. As more people accepted that idea, the network grew stronger, liquidity rose, and new markets formed. But this story is not reducible to numbers and memes. is populated by human choices, by hunger and generosity, by curiosity and trust. Jeremy, the teenager who accepted Laszlo's offer, reportedly paid for the pizzas out of pocket and kept the bitcoins, a decision that would later become a quirky footnote in internet lore. Laszlo continued to contribute to the Bitcoin community writing code, discussing mining techniques and debating design choices rather than chasing headlines or hoarding wealth. His contribution was cultural and technical. He helped show the world a simple truth about money, namely that it becomes meaningful when we use it. Over the years, the Bitcoin pizza narrative has been retold, amplified, and mythologized because it condenses a complicated technological revolution into a single human moment. It's easy to laugh at the math of 10,000 BTC for pizza. But the deeper lesson is how revolutions begin, not with dramatic gestures, but with small acts that prove possibility. That tiny transaction helped spark experiments, entrepreneurial projects, and serious investments that scaled into exchanges, custodial services, and wallets. As infrastructure matured, trading venues emerged and capital flowed. From mercenary coders to venture capital firms, different communities entered the space and pushed prices, product development, and regulatory attention higher. The pizza purchase also spotlights something more philosophical: the social construction of money. Across history, new forms of money have always needed a practical moment that demonstrates utility: salt used as money because armies accepted it, coins because merchants trusted metal, paper because governments guaranteed value. Bitcoin needed a pizza. And when people began to treat Bitcoin like money, it's not merely as a speculative asset, but as a medium for exchange, it planted a seed. Of course, with the seed came new challenges and darker reflections. The same decentralization and pseudonymity that made Bitcoin appealing to some also attracted scams, hacks, and illicit uses. Speculators and opportunists crowded the market with schemes that often left ordinary people exposed. The technology also forced societies to ask awkward questions about regulation, taxation, and the role of central banks. Yet these debates are part of the maturation of any financial innovation. The story of the pizza is the opening chapter in a much longer drama. When Bitcoin later reached record highs, commentators and critics used the pizza anecdote to warn about volatility and irrational exuberance. Columnists asked whether such an asset could ever be a stable store of value or a practical currency if its purchasing power moved wildly from day to day. The pizza, they argued, was a parable that illustrated both the promise and peril of a new monetary experiment. Still, the culture around Bitcoin embraced the moment with delight. Each May, enthusiasts around the world mark Bitcoin Pizza Day with slices, parties, and code sprints celebrating not the money lost, but the fact that technology made a tiny, messy, real-world transaction possible. Businesses point to it when they announce crypto payment pilots. Educators use it as a teaching moment about adoption curves. Comedians use it for endless jokes. And for those who study the history of money, the pizza is a textbook moment, an origin story that contains a simple truth about adoption: someone must try it first, and the first uses are often humble. From a strategist's angle, the lesson is actionable. To make any new currency or platform valuable, you must deliver real use cases, no matter how small. You must seed transactions that demonstrate utility and invite others to participate. Laszlo's Pizza did exactly that. Today, Bitcoin is no longer purely experimental. It has a market structure, institutional investors, derivatives, and global trading venues. It has inspired thousands of alternative tokens and a whole industry of builders, entrepreneurs, and policymakers wrestling with what decentralized money means. Yet even as the system matures, the pizza moment remains a moral compass of sorts, an origin myth that reminds us why innovation matters and why small human acts can carry enormous consequences. When you stand back from the noise about price charts, regulation, and headline-grabbing fortunes, what remains is a story about people daring to use something new. It is about curiosity overriding caution, about community translating code into commerce, and about how a simple craving for pizza made millions of people rethink what money could be. So the next time you scroll through a headline about cryptocurrencies, remember that the revolution didn't start with an IPO or a boardroom. It started with a man who wanted dinner. He paid with code, not cash. And by doing so, he fed an idea that would grow into a movement reshaping the global conversation about money.